welcome in our next guest. That's David Steinbach, the CIO of Hines. David, happy Wednesday, and thanks for taking the time this morning. Really appreciate it. A little bit of green on the screen, but where there hasn't been a lot of green is in the treasury markets recently, and we've certainly seen yields on the long end move higher. Fed's been kind of stuck in the mud. What is this sort of higher for longer rate environment we found ourselves in the last few years really do to change how markets operate?
Well, look, thanks for having me. Yeah, and it is a very dynamic market right now to be investing in. And what we're seeing in the private markets in real estate, at least, is a real shift from a valuation-led cycle to a fundamentals one. And investors have I think effectively priced in where we are in the interest rate environment. I mean, look, this cycle we since 2022 rates have gone up over 550 basis points, and in some places, and now we're back down, but we're still about 350 basis points higher than we were ahead of this original tightening cycle that began in 2022. And the markets have mostly, I think, digested that. Again, on the private side, the bottom was probably last year. And fundamentals now, I think, are driving that market in terms of how investors are underwriting and pricing deals.
And when you look at some of the things that have made a lot of noise lately, it's been this idea around energy and oil prices and how that impacts things. How does that inflation shape kind of where capital can and I guess can't go?
Well, look, I mean, it's true that the energy costs are going to impact everything, as we all know, and real estate is not going to be immune. And that will likely mean that, the cost to develop, the cost to build and supply a new product will continue to creep up. The way we see it, though, is that right now is a significant acquisition opportunity. And I think investors, when they invest in real estate, they kind of normally think in terms of, do I buy or do I build? And right now is a definite buy moment in terms of where the market, how it's pricing. And what we're seeing is that not many people are building right now. And that dynamic was kind of already in play before these concerns on energy costs really got exacerbated the last few weeks. Mm-hmm. And the way that's playing out is that there's just historic lack of new supply around the world. And that means that any economy that is just even growing a little bit does need a continuous healthy supply of just to be being produced. And given that supply is shut off, and we just see that as a global phenomenon, frankly, we see that as an opportunity.
Okay, so where this sort of blurs for many when we're talking about real estate in particular is many's first thoughts is their actual residence if they own that, and that's kind of seen as an asset, but you could argue it's a liability at the same time. When we speak about real estate as an investment and the fundamentals in that particular market, for those who maybe dabble, are interested, what exactly are we talking about? I know interest rates, particularly for investment products, or investment properties, I mean, that's where it starts most of the time. So much is built off the cap rate and what you can generate. So talk to us about what you really mean by the fundamentals in this particular marketplace.
Well, you're 100% spot on in the perspective you just gave. I mean, that you really need to separate, houses that people buy for their own ownership and investing in an asset class that is quite broad and diverse. And so when I say real estate and where that market is and fundamentals, that's across logistics, that's across all forms of office, retail, and multifamily, which is more of a renting dynamic. And what we're seeing when I say fundamentals, what that means is the rents that an investor is able to see from the investments that they made into a particular project. And because there's a real lack of new supply, and because that has happened now for a number of years, and because the economy as a whole has had several years of job growth. Now, even if there's some consideration for what might happen in the next couple of months, people have to remember that what's been happening on the real estate side has been some dynamics that have been building for several years. And again, that means that where the pricing in the private markets of real estate is relative to other potential asset classes one can invest in, there's a real opportunity in it.
Yeah, there definitely could be, and certainly parts of it saw dramatic repricing in recent years with all the shifts in work dynamics and where people are actually sitting when they go to work. But we see some of that normalizing as well. I wish we had more time. Well, we'd love to continue the conversation in the future, but we got to run. David Steinbach, CIO of Hines, with some perspective on real estate as an asset class.